All right, welcome to this week's episode of Old Gold. Today we have Jonah, who is our new intern that we have dubbed our chief economist. We'll get into that a little bit later, but he's our chief economist here at Chancery. And you all know the beautiful Jamila, my esteemed colleague, who you have seen in previous episodes. So, speaking of interns, we have just hired Jonah. He's just come on this week, and he's doing a fantastic job. But I want to let you guys know that we are looking for other interns as well. So if you have any sons, daughters, nieces, nephews, neighbors, anybody who might be looking for a summer internship at a company like Chancery, please get a hold of us. Let us know, and we'll take it from there. But we are looking for more interns, hopefully of as high caliber as Jonah is. So we are going to talk with Jonah today. As I mentioned, he is our chief economist. I want to have him talk a little bit about his background, where he's studying, what he's studying, and maybe what he's thinking about for the future. So, Jonah, can you give us a little background?
Yeah, sure. So I study at the LSE, London School of Economics. I'm sure most people in the UK will know it, but for any people who don't know it, the alumni, Mick Jagger is one, David Attenborough, George Soros, and JFK as well. And Friedrich Hayek's probably the most famous economist, but it's a very economics-focused school, big on the social sciences. Most people here study economics in some form or another, and I study economics with politics on the side, but mostly focused on economics, which set me up well for this sort of work. And Jeremy came on board, said, "We've got some economics work that you want you to do." I said, "Yeah, sure, happy to do it." And Jeremy basically just gives me good tasks to do. He's always got ideas, he's always got something for me to do. Yeah. Oh, I'm loving it. It's so fast paced. Jeremy's like 100 miles an hour. As someone who's, you're 20 years old, you've never been working at a real business, and you get immersed in it immediately. Like Jeremy, firstly, is very knowledgeable. He clearly knows the gold market inside out, but he's also is just bursting with ideas. He's always thinking about, what to do next, which is really good. Like, you're sort of getting dragged along by this force of Jeremy.
Yeah, as someone who's a little over 20, maybe a lot, but yeah, I would say I've had, considerable work experience, and this is one of the most fast-paced environments I've worked in. And I worked for like a startup commercial developer at one point who was deals, deals, deals. I think Jeremy, like we were just talking, doesn't sleep. He's always working. Yeah.
I've mentioned that in previous episodes. I don't know how he does it, but yeah, he's a force of nature. Jeremy is. I don't know. Sometimes I'm hours ahead of him in time zone, and sometimes we're messaging, and I think to myself, wait a minute, it's got to be 2 a.m. your time. What are you doing? But yeah, sometimes he's seemingly never sleeps. So Jeremy had you on a project, Jonah, recently that you have completed, some type of sentiment indicator. So I want to have you kind of explain how that idea came about, and how you ended up putting it together. I know a lot of it is kind of proprietary for Chancery, so obviously don't give up any secrets, but give us kind of the roundabout way of how that came about.
Yeah, sure. So the original idea actually came from Monaco 64. I don't know if you knew that, Eric, but I mean, a lot of
I
people
didn't.
know Mario,
He's a good friend
177,000
of mine.
subscribers. Yeah. And
Yeah.
Jeremy got me on a call with him, which I was absolutely astounded by. I was like a little fanboy,
Mario's great. He's very nice.
Yeah, such a great guy. And he basically had the idea, like he'd seen, oh, my views have gone down significantly ever since the gold peak. And so Jeremy got me to look at his and others, we don't say who, but basically other investors or who talk about gold and silver investing, and to basically just sum up their views over the past year. And these are all very consistent uploaders. They post basically every day. So that's a really good sample for you to look at. It's pretty consistent. At least one a day, you can see how it's going on average, and it'll get rid of any specific videos that blow up. Basically, or do very bad, and it should average out over time and over the three different investors, YouTubers. Sorry. And so what we found is basically when gold was flat around 3,300, the views were averaging around 20,000 a month. And then in the January February boom, it's a clear timing when it hits the peak. Gold hits 5,500, and the channels are averaging 72,000 views among them. So they completely boom. I mean, you can almost feel sorry for the YouTubers because it's not really their fault. Like how many views they get is correlated with how many people are actually invested in gold and are searching up how gold is doing and searching up their videos. And then ever since that peak, it's come down pretty significantly. The views are actually about 25-30% lower than they were before when gold was flat, which suggests that people basically right now aren't interested in gold. They're not searching it up. It's not their focus. People are focusing on oil. People are focusing on AI. People are focusing on the SpaceX IPOs and all that stuff. That's the sort of flashy stuff that's going on right now, which for gold is brilliant news, really, for right now. The best time to invest is when sentiment is low. If you really want to catch the upwards movement, that's the perfect time. It's classic. It's almost Warren Buffett be greedy when others are fearful, be fearful when others are greedy. This is the exact perfect time to get started on gold, which is why we think that gold had its peak at 5,500, came down for a classic momentary trough, and it's just at the trough of sentiment. And when that sentiment changes, and the marginal buyer right now on margin, they're marginal sellers, but once the sentiment changes, people get more interested, retail gets more interested, it's gonna absolutely shoot up.
Yeah, and I think I think people are afraid that it already reached its peak, like that there's no more upside left for gold. Like the 5,000 was it, but it's got a long way to go still. And as long as these kind of geopolitical tensions are here, as long as gold is the safety from the dollar, counteracting those inflation concerns, I think, there's still a lot of runway. And, people think it might be a flash in the pan, but you look at returns for gold over 1, 3, 5, 10 years, it's steady, like a value, and it's great. So, yeah.
And overall, I mean, from a macro view, we are in basically a commodities bull market, right? So gold and silver are obviously kind of leading the charge there. We know that tungsten has gone crazy because we're in tungsten as well. 1,000% in a year or something on the price. But as far as precious metals go, there's so much room to run. What we saw up to the recent peak was just the first leg. And for people that are in the know, and of course we're aware of this because we are in the business and we deal with investors all the time that are looking for very good value in gold and mining. And a lot of our investors, I won't say a lot, but I'll say the really smart ones, are putting in a lot of money right now into our projects. We're seeing some very big tickets, and it's because the sentiment is low, and they know that basically we are now basing at around the 43 to 4,500 level. In fact, the consensus here at Chancery is that we are at a critical turning point here. And as gold is basing around that 43 to 4,500 level, last week we hit a low. It could very well be sort of the bottom, yet to be seen. But we're basically at that turning point. More importantly is the path ahead and the next leg up. And that next leg up could be pretty significant. I know Jeremy's been saying 7,000 by Christmas, so we're going to use that as our official forecast for Chancery for gold into the end of the year. We're looking at somewhere in the 7,000 area. So, the next leg up is probably going to be pretty explosive, and that's not going to be the final one either. As Jamila mentioned, the more geopolitical chaos we have, which it seems that it's not really going to wind down anytime soon. We're pretty well on the road to World War III, unfortunately, for various reasons.
And
but Yeah, go ahead.
I was going to say, especially, kind of the institutional managers, some of the kind of larger family offices, they're looking at these sell side analyst estimates, these consensus estimates. And, people are afraid, again, like we talked about, of the price of gold falling off. But these analysts, they do their diligence, their hard work, and the majority, are estimating about like 4,000 to 5,000, and that's because they're conservative. And they have to be conservative because of their base. And so I don't think we're very far off. I think they're just trying to not get caught in you overpromised. But so yeah, I think we're on track to reach those goals.
Yeah, no, I definitely agree with you. I know a lot of analysts try to be conservative, because they don't want to overpromise and then have an underdelivery. But I don't think that that's really going to be the case. I think that the shit show, so to say, is only really just begun. And as we go forward, it's unfortunate because, of course, the world is going to be thrown into much more chaos with the sovereign debt crisis that we now have globally. It's going to really start to unravel in the next couple of years. The movement of what central banks are doing at the moment with relation to gold. And there's a lot of topics to cover, which I don't know that we'll be able to cover them all today in this episode, but over the course of time, for sure. One thing that I did want to get into, Jamila, you recently went out to New York and you met with a lot of investors. You did like 3 days of presentations, and you got a pretty good feeling for their general sentiment on things. And I know that you're kind of up to date on a lot of the M&A activity in the industry as well. So let's talk about that. Tell us about what happened in New York and kind of how you felt the sentiment was and the feedback that you got from all the investors you presented to.
Well, first of all, I'll say really love going to New York for work because there's this energy with the city, and you feel like you have to go, 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 and everyone cares about finance that I meet. So it's a very energized city, and I loved being able to get to connect with investors in real time, face to face, because you can actually have deeper conversations. It's all about relationship management and getting people to trust you and being credible. And so, yeah, we partnered with Forex Capital to do these presentations. I changed up our presentation that a lot of investors will see because these were prospective investors. A lot of them don't know what a gold royalty is. Now it's becoming more popular, but for the average investor who maybe doesn't have that much gold experience or exposure, they don't know what a gold royalty company is, and they get skeptical about a new pitch or a new idea in that space because gold is as old as time. So I spent a lot of time, I would say, explaining kind of how accretive gold royalties are to a single mine. Now, single mines are still, great investment, but if you're really looking for the, minimal risk with operations, if you're looking for those high margins and access to the diversification amongst geographies, like the royalty is like it has such an appealing profile, and people caught on by the end of the speech, but at first they were like, what is this? And I would say the sentiment overall was pretty, a lot of people there invested in gold already. No, it's a great investment. They just didn't really know about the royalty vehicle. And then there was another kind of side of investors who were skeptical. And like I said, thought gold already reached its peak, thought gold may be too volatile, which I pointed out, well, look at the stock market. And then I pointed to those long-term returns we talked about, 5, 10, 20 years. it's, you may have little hiccups. That's what the market is. But overall, the cumulative returns with gold is incredible, and it'll always be that source of value. So, oh, and another thing I want to mention is you said about that upside potential. So a lot of people, they didn't quite get at first how gold royalty companies don't really have a cap to how much value they can provide, because you keep on doing these asset level acquisitions and getting more royalty deals. You keep adding value to the portfolio. And even if a mine were to drop off or need a restart or what have you, you still have, we still have 4 other mines when we're growing all the time to kind of hedge that risk. So, yeah.
And royalty companies in general, investing in a royalty company in particular, is very low risk, and that appeals to a lot of very conservative investors. A lot of people see investing in mines, even though if you do your due diligence and everything looks good, then a mine, as we know, is not particularly risky, especially in this environment that we're in at 4,500 gold and going north. But people kind of see that, especially people who maybe aren't experienced at doing it. People see getting into gold mines or any type of mining as a bit risky, and it can be for sure if you haven't done your diligence and you're putting your money into something that really is a bit shoddy. Then sure, it's risky. We don't get into those kind of things, right? We don't put things out for our investors that are shoddy. So. Obviously, it's a lot less risk, and our investors realize that. That's why we have investors that follow us all across our different projects.
Yeah, can I just say that the investors that I've met, they all completely trust Jeremy with everything. They know that in the past he's always delivered for them. He'll always tell them what's going on, tell them exactly what's going on, and that he's going to produce. They trust him with their lives, So they're very happy to do as he says.
And that's, I mean, I know Jeremy has this incredible base, but one thing we're definitely trying to grow is our footprint in North America here, because we have a lot of investors, but they don't get to get the face to face with Jeremy or Ed or Max. And so, we recently brought on another person on our team. She's here in Scottsdale, Arizona with me. And we really want to meet with more investors. We really want to do more events and just kind of, connect with people, not only about Chancery Royalty, but about the wonderful mines we have and what they're doing. So Jen Waldrop is her name. We're going to put a little link in the bottom here. So if you want to reach out to her, if you think there is an investor event or engagement that fits Chancery Royalty's profile, please shoot her an email. She's happy to help.
Absolutely. And once again, I'm sure that the viewers probably know, but I'm going to repeat it. The projects that we have open right now, we've got open financing rounds for both Chancery Royalty at $3 a share and also for Pilar Gold. And we have recently received some pretty exciting, there's been a bit of a buzz internally about Pilar. It's a bit early for the discussion, but there's been a lot of talk internally about the prospect of listing Pilar on one of the major U.S. exchanges, namely the NASDAQ. So that is a very exciting prospect, to say the least. It is obviously not set in stone yet, but it is something that has kind of come to light in the last week. So
you
really
go
exciting
to New York,
stuff.
and everyone's going to ask, "Are you listing on our exchange? Are you listing?" And I'm sure,
Sure.
Canadian exchanges are very popular for miners, but as far as the kind of retail investor, they're like, we want it here on the NASDAQ or NYSE or somewhere here where the hub is in America. So
yeah, and it just makes it very accessible. A lot of people don't have complex brokerage accounts, so especially for Americans, it's very easy to trade on the NYSE or the NASDAQ or the S&P. So when we talked about that this past week, it was quite exciting. I was actually a bit surprised by that. Most of our companies go on different exchanges, but it looks like there's a very good possibility that Pilar may go on the NASDAQ. So stay tuned for that, folks. There will be more news on that to come. And like I said, it's not set in stone, but quite an exciting conversation nonetheless. All right. So one other thing that I wanted to touch on, and Jonah, you're pretty young. You might know a lot about this. I never really. I have a lot of friends who got into crypto and made a bunch of money on it. I have a lot of friends who lost a lot of money on it. But if I'm a trader. I've been a trader for quite a long time, just on my own. Nothing huge. I don't trade for anyone else. But I can. A chart is a chart to me. Everybody, all these sort of crypto bugs. Oh, it's going to the moon and all this. And for a minute, it did. Bitcoin reached 122,000 back in October, and now, of course, that's been cut in half. So it's had quite a haircut since last October. So it seems to me, although maybe because it's really collapsed, there's been a bit of a bloodbath since then. So it may have some sort of a dead cat bounce, as we call it in trading. But I really don't know if it's ever going to get back to where it was. So perhaps there's a real collapse coming as the next leg in gold runs up. Maybe this bloodbath in Bitcoin isn't quite over in the long term. So I don't know. Jonah, let me know your opinion about that. Do you have any feelings about it?
Yeah, so I know Jeremy feels the same, think that crypto is a bit of a scam. It's not real, it's not dependable. Gold has been a commodity since, 5,000 years before Jesus was born. It was valuable then. Empires are made out of gold back then. And everyone still loves it now because no one can deny the shine. If you see the shine of gold, people are just attracted to it. People are impressed by it. Whereas, Bitcoin, crypto aren't based on anything real, really. I think they're trying to be gold. They're trying to be what gold is, just a new financial invention. And I personally wouldn't touch it. I know a lot of people my age especially disagree. They like gold the fact that it can't be touched by governments, basically. It's a way to insure yourself.
Yeah, and we're seeing a lot of innovation with gold. The gold tokenization, you see Tether, you see there's other companies as well, kind of developing these gold wallets. And I've been very skeptical about crypto because of what you said. What's it backed by? What's it, what's the stability and fundamentals in that? I was an econ major too back in the day, but yeah. And so I'm like, so, what's holding this together? But I think, with this tokenization where you're storing the physical supply and you're getting these kind of gold coins here that are going to be more liquid than, say, a bullion brick. I think it's kind of the wave of the future. And I'm really interested to see how that progresses. And I think there's going to be, you see a lot of consolidation in gold right now because there's not a lot of new mines. And so, royalties are providing some asset level consolidation, but I think there's going to be consolidation with platforms like these too, with platforms that allow you to have like the offtake and physical gold form that you could liquidate. But it's hard to forecast like any other commodity or market. But I think gold is overdue for an innovation wave.
If you can imagine gold all being stored in one place and you don't have to pay the cost of storing gold and you can buy it from your phone, it's going to be a new level of demand. It's something that's not really talked about enough, but it's where those technologies can be really helpful.
It's interesting in some parts of the world, like I know in the Middle East. I don't know if you guys have ever been to the Dubai airport, but there were sort of vending machines where you could buy
No way.
gold.
Really?
It was kind of a weird thing years ago. Yeah, this was years ago. Yeah. And I haven't really seen that anywhere else. There are certain cultures that are very big on gold. The Indians are very big on physical gold. The Thais actually have their own measure of gold weight. It's called the baht, which is confusing because their currency is also called the baht. But 1 baht of gold is how they measure gold. So when you buy gold in Thailand, you buy it by the baht. And it's not meaning the currency, the baht, it means a specific measurement of weight for gold. And it's specific to gold, nothing else.
Well, China as well loves gold, and they're practically supporting gold at the current levels right now. I was talking about how the they had these gold accumulation accounts at all these Chinese private banks where they just buy gold for their customers. And then as gold was hit 5,500, they sort of stopped doing that. And now they've resumed doing it at 4,500. So the Chinese demand for gold, even at this levels, is practically insatiable, and it's not going to stop, and it's going to keep supporting the market at this current level, whatever happens.
Yeah, I would definitely agree with that. The Indians as well, especially at certain times of year, they have an insatiable appetite for
Yeah,
gold.
you said the Middle East, and I'm like, it was funny. I wasn't in mining beforehand. I was in other industries, and I'm Arab American, and when I was learning about this industry, someone said, the Middle East and Arab countries, they really love gold. I'm like, oh yeah, I never put that together. So I'd love to
Yeah,
I'd love to go to
they do.
Dubai. I'm refreshing my Arabic right now, and so, yeah, that would be great to go to UAE or anywhere and meet investors there too. So yeah.
If there are any Emirati investors who are currently watching this episode, please get a hold of us, and we would love to come out there. I'm based in Asia, so it's not so far for me, but we would love to come out there and maybe have an event and meet some investors and talk shop. Yeah. So we've covered a lot of topics today. Is there anything else that we haven't covered that we meant to today? I know Jamila talked about some of the her experience in New York, some of the M&A that's going on. In addition to what we talked about, you sent me an article, and I read through that, and it's really interesting because there's a lot of deals going on with sort of gold acquisition, and there may be fewer deals, but people are paying more for them.
Exactly. Yeah, that's the one last point I was going to hit on was that you're not seeing like mega mergers in gold necessarily right now, but the deal value is incredibly high. It's been at a high in 2024 and 2025 that it hasn't reached before. And it's mainly with the gold mines themselves, not gold royalties, merging with other royalties. It's with these mines, and it's because they need to scale. There's not a lot of gold mines that that are being built now because it takes so much time and cost and money to do the exploration part. And so that's why they're doing consolidation on their level, and mines are looking to royalties like us to help them raise the capital and say, we have the infrastructure, we have the history of production. We just need a partner to help us scale and get there.
It's true. It's something that it's sort of part of our focus in looking at sort of mines that already have infrastructure built, or I guess you could call them secondhand mines that have already, had a lot of construction done and infrastructure in place. I was talking to Jeremy and Enrique and Richard about Pilar, and to build an asset like Pilar today from scratch would be probably over 500 million, and that's just to build the infrastructure. So equipment, infrastructure, and all the rest of it. So this is why I think there's a lot of acquisition that's happening in the industry because and like I said, it's part of our strategy as well. We have acquired some really incredible assets because Jeremy knows what he's doing, and he moves very quickly when we see something that looks like it's a really good deal for our investors. We want to be able to offer a lot of value for investors, and so far we've been pretty good at doing that. So Jeremy's very good at pulling the trigger and getting things done and finding deals that are pretty incredible. You look at some of the money that these acquisitions are going for, and we've really gotten some incredible deals.
And it's incredible how many old gold mines, silver mines, everything that have been abandoned or just need the refurbishment or were in production at some point. I'm like, the infrastructure is there, especially, I'm in Arizona. The gold rush came through here. Like there is mining shafts everywhere. And so, So yeah, it's just about getting the assets and getting them up and going, which once you have the infrastructure, it's not billions of dollars to get it going then anymore. So
And a perfect example, as you just mentioned, in Arizona is Gold Road. And Gold Road is very soon going public. We've got basically three of our projects that we have worked on going public. We've got Liva, we've got Tucano, and we've got Gold Road all going public very soon. So we're very excited about that. And, Gold Road is just an example of what we were just talking about. We picked that up for not a lot of money. We put somebody in charge of it who knows what they're doing on the ground. And then, of course, Svein and Nils, the Norwegians, the magic Norwegians, are running things and financing things. And we had a couple rounds of financing for it. And now it's absolutely humming along, and it's producing, and we're taking it public. So. Just an example of how hot the industry actually is, regardless of sentiment. The retail sentiment may be down, but the people who are aware of what's actually happening with gold and the industry are piling in, which is probably why we're seeing big tickets now from some of the investors that are in the know.
When retail sentiment comes in, it's going to absolutely rocket up.
oh yeah. And
Yes,
then yeah,
that'll
you
be
get
the
all
next leg
these
up.
mines, on an exchange, then the institutional managers come through. And it's just they need to see that, liquidity and financial reporting, which is totally understandable.
Yeah,
But our retail investors really got us
yeah.
to this stage. And then, then we graduate to institutional, but we'll always love our retail investors. We always will.
Yes, of course. And of course, the retail investors are the ones who really end up making a great return, right? They get in, of course, they're taking the quote unquote risk when they get in very early on. They do their due diligence, they put in some of their hard earned money, and then later on, when we go public and they hold that stock even beyond that, they make pretty incredible returns. So, and that's the idea. That's what we're trying to do. So, all right. Well, this has been a really great discussion. It's been great to be able to introduce you to our viewers, Jonah. And we're going to have yeah, you're very welcome. Maybe we'll have you on again before the summer ends. We're very happy to have you. We're happy to have you for the summer, and we'll have some fun. I think we hit all of our points for today, so we're pretty happy about that. All right. So that is it for this week's episode of Old Gold. I want to thank you all for joining in. I want to thank all of our investors, as always. The links are down below for the Chancery raise and the Pilar raise. So if you have not invested or checked it out yet, please do so. We're happy to get on the phone or email, however you like to communicate, and answer any questions that you have. And so that's what we're here for. Essentially, we are the investor relations team, except for Jonah. He's our chief economist.
Chief economist.
So yeah. All right, guys. Until next week. Enjoy your weekend, and we will see you again. This is Old Gold signing out.